Family, 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 family. Let me know if I'm coming in loud and clear. Hopefully, you're doing absolutely amazing. We'll go ahead and start saying we're repping our leverage today. I feel like there's a movement. I feel like there's energy right now. So, thought I would put on today. This says leverage on it. This is from our mastermind that we had a couple of years ago, our business, life, and financial mastermind in person. So, thought I would bring that out today. Because this is highly important. I don't think people understand how important, in my opinion, these last couple of stock sermon Sundays are. What's going on? What's going on? What's going on? These last couple of stock sermon Sundays are. And, as we go into the holidays, I do understand that people are starting to kind of wind down, but not us, right? I'm prepping. I will enjoy my holiday season. But we've got 2 more solid weeks this week and next week, and then going into that Christmas holiday season. What does that look like? So these next 2 stock sermon Sundays, our weekly stock analysis is going to be highly, highly important. Why? Because this FOMC meeting that we'll talk about, and this is just the intro, will be a setup of how we go into our earnings season for January, February, right? What's going on, Ravi? How are you, Trent? Shouting out everybody down in the chat. Hopefully you're doing absolutely amazing. I know YouTube will be slowly pushing this out there as people join in late. I do understand that I moved it up slightly, right? Moved it up slightly simply because it is getting later, a little bit darker on the East Coast. So I wanted to get this out so you can get ready for the day. The evening, have your dinner, do all those good things. Hopefully I'm a little bit considerate, right? Instead of doing a 7 or 8 p.m. PST. You're like, Brian, I am not joining no 11 o'clock, man. I'm asleep. I'm not joining no 11 o'clock. I'm asleep. All right. What's going on, Jesus? How are you? All righty. Let's jump into it. Let's get right off to it today. I'm going to give another 3 minutes, just at the 10-minute top of the hour, another 3 minutes. What's been going on really quick? This is a time we always take. If you are rewatching, re-listening to this, you'll see me share my screen in a second. So if you want to skip forward, this is a time that people, just kind of welcome people in, give them time to settle in, get their charts up, get everything ready. If they'd like to ask me any questions or anything, I can just touch on. But this has been an awesome year. I've been very pleased. I went back in my journal of trades and just the overall read on the market. Every year, I reflect on not only, hopefully impacting people here of learning a new skill set or giving them inspiration, like the last video I just posted, that this is possible. But I think it's so cool that if anyone started this year, last year, or just really actively started, you're about to start off a fresh new year. So take it seriously going into January of what is a goal, right? And we'll continuously talk about this in Leverage University and also here on this YouTube channel is how do I set myself up for some goals that I want? What are some setups that I can continuously test? What is my goal for January? How am I going to carry out February? What if I do make profits? Where do I put those profits? What am I looking for? Right. So we'll talk about that going into the next couple of stock sermon Sundays. All right. What else? I'll talk about the options. A lot of people have been asking if you've been watching my social on stories. If you're not following that, it's linked right there. Go follow my Instagram there. I post a lot of stories almost every single day, some updates. The options like beginner launch pad course, right? I've created a lot of courses in my lifetime, life coaching courses, e-commerce courses, you can name it. I've created a course on it. And over the years, I've understood that the course is just a starting point, but some people need that structure. Right. And even for people in Leverage University, maybe you don't want to search all through YouTube. That's why I just posted here. I'm like, you can go watch it if you want to, but what if there was a shortened version of it that these are the important things in order, right? And not a 40-minute video, right? So having short videos, how to set up your Robinhood, how to do this, how to set up your charts, what indicators to add, and you can search cleanly through that mini course, right? So my goal is for someone to be able to watch it in a full evening or a full day or over at least a couple of days and say, hey, I'm ready to either jump into live trading or I'm ready to better understand this and how we move. So that will be coming out, and my plan for that for everybody is anyone in Leverage University, you already have access. Don't even worry about that, right? If you're already inside of Leverage University, don't even worry about that, right? But if someone is coming in or wanting to join, or just, anyone that doesn't have time for that, right? I will be offering it free for a period of time. I don't know how long just yet. So an intro period where we can get actual true testimonials. I can tweak it, those types of things, and see if it's even valuable. So just give it out, right? Just give it out. So if you've got anybody that's been on the fence, just know that that's coming in the next probably couple weeks or so. I'll probably span it out to starting it in at the end of like maybe holidays into January potentially. If I launch it earlier, I'll let you know at least a week ahead of time. But I'm either thinking about limiting the spots or just the time on it, right? So hey, it's free for 2 weeks or so. Just everyone join, whatever, or free for a week. Just join if you get in, right? And then we can have testimonials. We can have people say, hey, I don't understand this. Hey, can you add this in there? So I think that would be really, really good if y'all let me know how that sounds to you. And then after that, maybe a little small fee, right? A little small fee just to see who's serious, but just giving it out for free. All right. But anyways, there is the top of the hour. Let's jump into it. I appreciate you all for being here. Welcome to our Stock Sermon Sunday. This is our weekly stock market analysis where we go over what's going to happen with earnings, right? If we have any earnings on our calendar, if we have any data that's pending for the week that's going to impact what's going on with the Federal Reserve. And speaking of the Federal Reserve, if you saw the title or the thumbnail, if you don't know what FOMC is, it's essentially the Federal Reserve meeting where they make a decision on rate cuts, rate pauses, or rate hikes. So that is the rate decision day, right? And I think it's so important if anyone's new to this skill set to understand what are the important days, why the market moves so crazy, what just happened. And if you don't know who Federal Reserve Chairman Powell is, or the Federal Reserve Chair in general, they have an immense amount of power, right? They can change the sentiment of a market simply by speaking. And those of you that know, you know. So that is happening this Wednesday at 2 p.m. Eastern Standard Time. That is why this is so highly important, is because if you're not paying attention or we don't read into what is actually going on, I'll explain a little bit more today about, well, what happens either way, Brian. If we rate cut, what needs to be said by Powell to actually spur us into crazy new all-time highs, right? But also, what should we be cautionary of, simply because if you remember our last Fed meeting, we had a rate cut and then we dropped right back down, right? I thought rate cuts were good. I thought, everything was going to go higher. And I talked about this all weekend and over the past week, just explaining to people really who don't necessarily understand, and maybe you do, like what rate cuts actually mean, right? And I'll show a graph as well so you better understand, because everyone's praising for more rate cuts. But if you are just a general retail investor or a consumer, that doesn't necessarily, it's not going to help your situation, right? Rate cuts really benefit business owners. That's why I always suggest, and this is the business coach coming out of me, that everyone should have a functional LLC, S Corp, and or C Corp, right? If you don't, it's like, I don't have a business. I don't know what it doesn't necessarily matter, right? Own your own intellectual property, because then you can be able to, if you didn't know, all of my coaching services are write-offs, not financial advice. But when I'm coaching someone one-on-one or educational services, that is underneath the educational tab, right? So if you have a business and you're trying to learn something, my clients typically write my services off. So if you're having rate cuts, right, guess who that's benefiting? Big tech, small cap companies, right, that are trying to borrow at a cheaper rate, banks. So then they'll start offering all these offers. Come get our credit card. Come get the stuff. Come get the stuff. And you're like, oh, I guess I have a business, but I also don't know how to pay the money back or whatever. So it's benefiting business owners, right? Because guess what? Housing prices are still high. So even if the housing rate comes down slightly, what does that do? So rate cuts are typically inflationary, right? They will raise the price of goods and services. So just kind of getting a general sentiment, just in case anyone's on here watching, wondering if man, I thought rate cuts are good. I praise rate cuts. So assets go up, right? Because they can borrow at a cheaper rate, create some more value, supply and demand, right? So I still think these rate cuts, where everyone praising for rate cuts, more and more rate cuts, it doesn't necessarily make sense. I personally think we need some pauses or maybe even a hike, right? So you're like, what? Makes no sense. Why would you want higher rates? And it's just history repeats itself. If you know, you know. All right. So let's jump into it today. I'm going to share my screen here. And again, for those of you that have never been here before, or if it's your maybe second time, I want to go over the fundamentals. Then we'll jump on the charts. I'll look at our things that might affect the market one way or the other. Be prepared for a bullish case and or a bearish case. What my kind of sentiment slash thesis is for the week. I don't like to say prediction, but thesis, what I see potentially on the horizon for this week, as well as what maybe you should be thinking about for 2026, just in case someone's like, I'm not really interested in kind of day trading. I'm kind of looking further out. I'm busy this holiday season. I got stuff going on. Is there anything that I should be looking out for going into 2026, Q1, Q2, Q3? Is there any like maybe swings setups for long dated call options, things of that nature? I still think it's tough to swing trade in this market because you remember what happened last December and January. We entered the new year and we immediately dropped. So I think share buying is great, but long dated call options, it's a little bit difficult because we're going up and down and up and down and up and down, right? So, yeah. So again, this is Leverage University. If you've never been in, here it is. If you wanted to ever look what's inside, our trading floor is here. I signal day trades there. Swing trades, these are the ones I'm looking at right now. We got shares and leaps. We keep it organized based on threads. So any specific ticker that we're looking at, I do a full analysis over it, and as well as our wins channel. So for everyone there that's winning, we've been absolutely killing NVIDIA personally. Absolutely killing NVIDIA. Amazon, shout out to David, other people in here, shout out Trent, been absolutely killing it as well. And anyone else that's in Leverage University I did not mention. All right, so there is that. Let's jump into the let's do economic data. Okay. So what we got on the docket this week are a couple of things. Obviously, the main agenda is going to be over Wednesday, December 10th, right here at 2 p.m. Eastern Standard Time. So that is when the Fed speaks. If you've never, I will be live trading, or I will be doing 2 trading sessions inside of Leverage University. On that day, I'll be trading in the morning, right? I'll explain to my members, and I'll also explain to you guys. I'll make some more YouTube videos as well on the channel about how to look at that. But typically we take it light on an FOMC day. And, maybe sometimes if there's a trade, a scalp at the end of the day, we might take it. But other than that, you typically want to wait until after Powell gets off the stage. Okay. After he gets off, that is when the sentiment goes. He will speak, and then you will see the market either drop, pop, or continue in one direction or chop around. Okay. And that's what we typically wait on, is like, what is he hawkish? Meaning, is he bearish a little bit like he was last time? Or is he very bullish and dovish about, hey, everything seems good, we're heading in the right direction? He says all his fancy words and, so on and so forth. But all we're watching as traders is we're looking on the charts and just seeing how the SPY and the QQQ are moving back and forth. Okay. And then we're watching our key levels. Right. So I'm reacting based off of what his sentiment is. All right. Make sure we're still good here. Okay, cool. All right. So that is the big day. That's really what we need to worry about. As you can see here, really nothing there on Monday. So kind of a free day, FREE. All that means is simply that there's no interruptions. All right. So typically when there's no interruptions and no data, you have 2 scenarios. One, it's going to be a choppy day. Right? Low volume. It just kind of goes back and forth, right? It may choose a direction one way or the other, depending on what the sentiment is for that day. So if they want to come in on Monday and say, hey, we've ran it up for 2 weeks. Thanksgiving week was green. Last week was green, right? Typically 2 successions of green weeks with no pullback. People might be saying, yeah, pull back before we go higher. Because if we grind higher, I've been telling my community and you guys on YouTube that grinding higher without a pullback a lot of times signals some type of trap. Okay. Job openings, delayed report there, any 10 a.m. data. So we might have some action there on Tuesday. So I think Tuesday will be a really good day because we'll get Monday out of the way. Mondays Typically not the best trading day for me personally, just by my journal in general. But if I see something, I'll take it, but I'll take it very light. But ultimately, I want to trade on Tuesday a little bit there because I got Monday out of the way, and then Wednesday morning maybe take a little something. But Thursday and Friday are going to be those big days, right? Thursday and Friday. Let's look at the following week here. Okay, this is going to be a heavy next 2 weeks. Okay. Because we've got FOMC and then we've got some PMI data. It looks like we'll have some CPI that's finally coming out. So we really haven't had much of a consumer price index report necessarily. We had a PPI report, but CPI has been delayed. So here goes my sentiment based off of this data. If I was Fed Powell, and if you didn't listen to his last meeting, why did the market drop after we had the last rate cut? Why did we go into November after rate cuts and we were so bearish, right? It's because he essentially said these words, not essentially, he said these words, the Fed has been flying blind. Let me know down below in the comments if you remember that sentiment. If you don't, like, what does that mean? That means that the Fed has not been having data to be able to make a decision on rate cuts. So as the data has been starting to release, that's why everyone's been saying, oh, it looks like we're going to have a rate cut. Oh, it looks like we're going to have a rate cut because some data has been starting to come in, but they still don't have all the pieces of the puzzle. So that's where it gives me a sentiment that, cool, we're bullish. Looks like we're going into new all-time highs and looks like we're going and touching new highs. But then is there a rug pull coming back again because he comes in and just says, yeah, we don't have enough data. We got to see. I'll go ahead and give you your rate cut. Right? That's fine. You already know it's coming. Just here's your 25 basis points, right? Here's maybe he does something aggressive. Maybe he does 50, right? But I think it's going to be 25, and there you go. So there's my kind of thesis just based on experience of looking at the charts and seeing that, okay, if everyone knows, it's kind of like when everyone knows there's a sale going on and it's like, okay, there's a sale going on, or everyone knows that this thing is going to happen. It's inevitable. So it's already kind of been priced in my opinion, on this upside. Hey, we're going to have rate cuts. Hey, we're going to have rate cuts. Hey, we're going to have rate cuts. All right. But we were pulling back because it was a little bit iffy on rate cuts. Right now, Brian, does this mean that we are bearish, that we could be going back to lows? No, not necessarily. So I'll show you on the charts that we've been waiting for, like, if you've been watching my videos, I've been saying 674, 675 pullback, 674, 675 pullback on the SPY. All right. So if we get some type of pullback, that's the first level I will be looking at. Okay, cool. Give me a 5 in the chat if that was decent of an explanation. Does everyone understand? Give me a 5 in the chat if everyone is understanding of that and you got a clear picture. Maybe a 4.5, 4 potentially. If you're like, I'm still confused, I don't know what these reports mean. That's okay. That's okay. Maybe I'll do a YouTube video or something in that little mini course about how to look at reports, like what reports are important, right? Fundamental analysis. Okay. Let's go into our earnings and what do we have for earnings this week? Okay. We've got Oracle and we've got AVGO and we've got Lulu and Costco, right? But there were two big dogs are Oracle and AVGO. Okay. And the setup on Oracle looks really good for a buying opportunity sitting right around $200. As we know, and I'll show you in the charts in just a second, Oracle, right, had a great earnings, right? They missed on earnings last time. I'm sorry. They missed on earnings, but they had a OpenAI partnership. It went up pretty much $100, right? Post earnings, but then it gave the whole move back plus some. Okay. So that is going to be interesting to watch. And I do like the dip on Oracle. I think it is warranted. The only concern that you may have been hearing about on Oracle is that they're an extreme amount of debt, right? So that's the only thing there. But otherwise, ignore the noise. Solid company, and it's on a dip. So watch Oracle. AVGO is sitting some points away from all-time highs, sitting right underneath $400. And AVGO has been, if not the strongest semiconductor through all of this. So I do not expect them to miss. So I'll just wait till after they report. I think AVGO trades very, very well on a Friday. So if I can get some cushion here on Tuesday, Wednesday at the beginning of the week, AVGO will be a Friday trading type of stock. Okay. Lululemon as well. That one's great on a dip buy. I think people still have questions about who's buying $100 leggings and who's got the money to do that. It's like, well, it's associated with Amex. It's like Amex stock is all the way up because it's servicing a certain type of clientele, right? Anyone who shops at Lululemon has the money to go and buy $90, $80 shirts or leggings or $80 shorts for men, so on and so forth. So it's not really hurting the average person that's saying, oh, I'll just go to Target or Walmart or order my stuff off Amazon. Like, people like their Lululemon. So I think personally, Lululemon is on a great discount. It's sitting right underneath $200. So do with you please on that. Adobe as well. I did miss that. I'm sorry. So a lot of people were like, what about Adobe as well? Also looks pretty good. Okay. I'll pause right there before we go on the charts. What questions anyone have before I move on? Fives, we're all good there? Fives, we're all good? Okay, perfect. What questions do I have before I move on? Nothing? Okay, cool. Let's keep going. Trying to keep these right around an hour, okay? All right, let's look at the SPY and analyze it from a weekly chart here. And we've got an interesting structure here. So if you've never been here before, you're rewatching. We talk about candle structure and location. Okay. We got a weekly chart. Each candlestick represents a week. And the last 2 weeks, if we work reading the chart from right to left, we have a nice bullish candle here off of the lows. So the trend continues. Okay. If we turn on our moving averages there, it's above the cluster of moving averages on a weekly. So there's the weekly 20, weekly 50, so on and so forth, all the way down 100 and 200. Okay. So that's also bullish, right? It's been riding this wave ever since this April dip, and it's been just going up in a 90-degree angle straight up. Okay. Now I'll show you something in a second back in 01, 08 of some similarities, but again, timing the top is not our job, right? Our job as traders and investors is to manage risk. Okay. So the risk to reward up here is really not the best. Okay. It might seem like it, but in my opinion, 700 is our top. That is the goal for the short term, right? That is where the market is trying to get to SPY 700. Okay. So if you draw a risk to reward here, you've got a little bit more, roughly around 2% to get there. Okay. 2%. So if you've been watching or seeing or kind of, just listening to sentiment from, in my opinion, very strategic technical analysis, like people that are looking at the charts and like, it might seem like fear mongering, right? But if you've been in this game long enough, you understand that the risk to reward starts to flip. So if we've gone straight up for 6 months, right, without really any pullback, this was decent right here. That was a nice dip buy the dip. Cool. That's fine. But the risk to reward any further on the S&P 500 right now is starting to get a little bit, tight. So that's all that you're hearing, just to kind of clear the air. Is there's no one fear mongering that, man, there's going to be a crash, and no one's saying that necessarily, because no one can predict when a crash is. But if you hear those terms, all we're saying is that, hey, be mindful of risk to reward. Loading the boat at new all-time high prints every single time, maybe not the best, but buying 10% pullbacks, buying 8% pullbacks, dip your toes in, right? So just wanted to warrant that right there, is that we are 2% away from 700 and roughly 0.5% from 689. Okay. Now on the ES futures, the futures market, this is a very key point right here at 6,900 on the futures. Well, Brian, I don't trade futures. I don't know anything about that necessarily, or I don't really pay attention. Why do you keep mentioning futures? Is because the futures market, the SPY is an ETF, exchange traded fund of the overall SPX S&P 500, and also the futures of the S&P 500 ES. Okay. All that simply means is that we watch these psychological levels just like we watch it on the SPY. So if we trade SPY, It's like, man, all time highs on SPY. Well, guess what? ES has to get through 6,900, right? That is a big psychological area, right? Because it's trying to get to 7,000, right? So we've got to get over that ES 6,900 pretty solidly. Otherwise, that's why you're seeing SPY right here on Friday look like this. Push, 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 push. Man, we're bullish, we're bullish, we're bullish, bullish, bullish. Last little push, big wick right there. And then we pull back. So we touched 6,900 on ES, which was roughly around 689 on SPY. And we pulled all the way back to 684 and we closed the day at 685. So we were pretty much flat, right? Flat on the day. Okay. So that's why reading the chart or understanding what's going on here on this grind is bullish, but is not necessarily the best price action. And that's where a lot of people in general get trapped. Look at that right there. Okay. And what do I mean by trapped? It doesn't mean don't stay bullish. It just means, where do you enter? Now, I still need to make that video on entries, like entries. Well, what do you mean by that? That means if you enter a trade for calls right here, right? And you don't scalp it, which I teach my community, and Trent, you've been doing an awesome job, other people as well. You trade the upside, but you take your profit because you know where the target is of resistance. People that don't take their profit, they hold it, step away, and the next thing you know, what is going on? Right? The entry was poor. The risk to reward is better if the market pulls back to this 675 zone. Does that make sense for everybody? What if we don't get that? Okay, that's fine, right? Just understand your risk up here is getting very tight for any more upside unless we break 690 like that. If we break 690, right? We need a pullback. We don't chase, pull back, hold that 690. Now we can take it up to 700. Right? People like the drawings or how it would look. So here's how it would ideally look. Okay. You want a big push through that 690, almost going into 691, 692. Cool. We've cleanly cleared. Wait for the pullback to 690, 691, and then cool. We can rotate. It's holding. We broke resistance. We good? Okay. Now there's a thing called look above and fail. Okay. There's a thing called look above and fail, which is why I'm a proponent of not chasing breakouts or breakdowns. Look above and fail is when we go up like this, man, we got a rate cut. Everyone chases, okay, cool. And then whoop, right back down. Look above, trap everyone up here, pull it back like they want to, and ultimately go where they want to go. Right? We've seen it many a times up in these areas. Look above, fail back down. Look above, there we go, break in a new alt. Nope, fail back down. Right? So that's why the break and retest is very key. Waiting for candle closures. Don't just look at a line chart on your Robinhood phone app thinking that it's just going to continue, right? So we good on that. Can I get a 5, maybe a 6 in the chat that you understand that? Is that good? Does that understand? Because I think sometimes people hear that and there's no clarification. Does that mean bearish? No, it just means entries on, if you're bullish, you would rather have a pullback, a deep, almost panic pullback like that. Ideally, watch it hold at these levels and then go from there. Okay. Now there's a level in between that is our, as we call it, just pivot point, right? You'll hear traders say a pivot point. The pivot point for SPY is going to be right at 683. Okay. 683. As long as we hold that 683, which is right around this zone here, then we can continue to just chop around and grind and grind and grind and grind and grind, right? So to get down to this zone here of 675, we would ideally want to break through 679, almost like it will start looking like that. Okay. It will start looking like that. You would either have an hourly or a 30-minute candle that starts getting underneath this 680. Okay. We'll wait for the retest like that. And if we want to trade it down, we can trade it down. Okay. And that's how it would ideally look. Okay. All right. So there's no surprises. That's my goal here, is when people jump in by themselves, or they're in another community, or they're trading on their own, is like, okay, I'm aware of what's going on and I'm prepared for whatever, right? I'm prepared for whatever. But if you go in so one-sided and then you look up and you're like, what in the world is going on? It's like, I'm not shocked, right? I'm not shocked. I have a game plan for that, right? Let's drag the fib up here and see where that fib 38.2 and 61.8 is. So if this is the all-time high right there at 689, right? Look exactly where that 38.2 Fibonacci retracement. If you have no idea what I'm talking about, go watch the fib retracement video that I talked about. That 38.2 is right at that level. See that? Right in that golden pocket pullback zone. Well, Brian, what if we just drastically break through that? Right? Well, most likely we'll start seeing those lower levels that I've been mentioning. 665 is the next zone of a pullback. Well, what if we see that? Are we bearish then? No, because this could still be setting a daily higher low off that trend line. You see that? So just because you see a 2% pullback or 1% pullback or something like that, that is technically still bullish as long as we're above 665. And you can see that's going right down into that golden pocket. So you can still remain bullish. All right. Only concern I would have ever on a mean reversal is if we start getting a very, very aggressive back underneath 660. Okay. So I'm prepared for a shallow pullback. I'm prepared for a deeper pullback, kind of a mid pullback. I'm prepared for almost like it looking like it's crashing. Right. Okay. Here's my full SPY analysis. Let's look back at some key things of rate cuts, of this whole idea around, man, is there going to be a crash soon? Are we going to get a bear market? Everyone keeps talking about this. Is this going to happen in 2026, 2027? Should I wait to be going heavy on things? Right? Should I keep some cash on the side and just trade? Right? So let me show you what this looks like here on the federal funds rate. Okay. This is a graph of the federal funds rate from the Federal Reserve. Okay. Look at the dates down here at the bottom. So I'm on a monthly chart. Okay. I'm on a monthly chart. Now you can't pull this up on Webull or Robinhood. So that's why I'm on TradingView. And look at the graph here. And I'm going to go back to 08, 07 really. Look at where the federal funds rate, they start cutting rates. You see where that curl starts happening? They start cutting rates in 06, 07, right before, guess what? 08 happens. So look at the federal funds rate when they start cutting rates aggressively. Does that make sense when I just said at the intro, when everyone's screaming and shouting that rate cuts are good, and people are probably looking at me crazy because I'm going like this. It's like, what is this dude talking about? It must be important. That's inflationary, right? So you're going to drive goods and prices up to where the average consumer is like, I can't afford this anymore, right? Or I don't want to spend anymore. And the market needs consumers to spend, right? So this is 08 when they started cutting rates. I want you to look at 01. Look at the dot-com bubble when they started cutting rates aggressively. What happened? Rate cuts right there. Well, look ironically where we are. Does that not look similar? Now, patterns can repeat themselves, but patterns can also be broken. So I want you to see as they're cutting rates, hey, more rate cuts. Hey, we're going to get a rate cut. Hey, we're going to get a rate cut. Hey, we're going to get a rate cut. Look at this as we're cutting rates. And guess where we are on the market? Let me go back here. Let's go to a monthly chart on the SPY. And let me go back to how the 08, 01 looked. Look at this 08. Remember that chart I just showed you on the federal funds rate? Printing new all-time highs, 04, printing new all-time highs, 05, printing new all-time highs, 06, printing new all-time highs, 07. Look when we get right here. Does that not look eerily similar? There's a little drop. There's the break into the last new all-time high. And then on a monthly chart, what starts happening? Give me a 6 in the chat if you're like, interesting. That's all I say these days. I'm like, interesting. I keep my mouth shut. I'm like, I'm just going to be prepared whenever it happens. All right. The euphoria. Now, what's different about this situation is that the companies that are printing and servicing these new all-time highs are companies that keep outperforming earnings. That's the only difference, is that these companies are actually showing up and performing with this AI race. So when people are saying the AI bubble, most technical analysts, which I would consider myself, looking at the technicals and the patterns and looking in the sentiments, like, this isn't making sense, right? At some point, something's got to give, okay? So this is what a crash looks like following those rate cuts that came in aggressively. And there's the '08 market crash, okay? Look at '01. Look at how the monthly chart started to look. Printing new all-time highs, printing new all-time highs. We finally got kind of a level where it essentially started to double top, could not get through 118 at the time that SPY was $118. Could not get through that 120 level. Well, what if 700 is that? Just something to question, okay? But you need to see it on a monthly. I need to see almost an engulfing candle on a monthly. I need to see a red month consistently close like this, solid, right? So there are the patterns of what this looks like when we're printing new all-time highs continuously, right? When the Fed is trying to cut rates. Hey, we're going to have more rate cuts. Hey, we're going to have more rate cuts. But the uninformed, the people that are yelling and screaming are business owners. The people that are yelling and screaming are small cap companies, right? Like your SoFis, right? Like your Ionics, your quantum stocks, all the things that ran tremendously and then pull all the way back. They're yelling and screaming like, give me more rate cuts, right? So we can keep growing. But guess what? The consumer doesn't have the funds discretionary to even be able to borrow and do what they need to do, because half folks don't even have a business. Get me? So this right here is looking eerily similar to where I've seen something similar like this, 2022, when a bear market will eventually come in at some point, whenever they decide to, okay? So again, the only thing I'm looking for is a monthly candle that closes red like that. That is what will give me kind of the big correction signal. Okay. Cool. 6s in the chat. We good? 6s in the chat. Everybody with me. You don't have to agree, but everybody with me. It's like, ooh, that's interesting. Okay. People are starting to see it. It's like, wow. Okay. So the proof is in the pudding. I'm not just here talking about it. I'm showing you patterns so you can actually see it for yourself, because there's a difference, but just saying like, hey, there's going to crash in 2026. And you're like, I don't see any sign of that. How? Where? Why? Can you give me a rationale? Can you back it up a little bit with history? And then all I'm saying is that we're going to react to it. We're not going to try to guess the top and whatever, because why do you think that, and my Leverage University members know this, is like, Brian, do you buy stocks? Do you buy shares? It's like, yeah, if you look back in the Bitcoin, like I was buying $200 of Bitcoin almost every day, right? Back in 2022. I know what a bear market looks like, and that's when I want to buy, like heavy. And if you're patient enough, you know that a bear market is inevitable. So you actually want that as an investor, right? So everyone that's yelling for Palantir to buy it at $200 to go higher are the people that have been in since 20, 30, 40, 50 bucks. Like, let me squeeze just a little bit more out of it, right? You get me? So That's what I am personally waiting on, and why I've just been silent. I'm like, I need to see a 50% retracement. I need to see a 30% retracement. I need to see a full year, right, of pain where people just stop. They just literally stop talking about stocks. They're thinking the world's ending, right? That's when I get interested. I'm gonna be like, hey, buy this, load up, buy this. Let's do leaps for sure. Now it's more of a day trader's market, right? It's more of a day trader's market, at least for right now, in my opinion. It's very difficult to swing trade on your high valued stocks, holding call positions overnight, swinging into the next day, so on and so forth. Okay. So if this is good, screenshot it, share it, tag me if you're like, man, okay, maybe if this is your first time actually someone showing you this versus just telling you it, right? So cool, let's keep moving. So there's my kind of thesis, how I bring together everything of why when I react, it's like, man, this dude didn't talk about buying up heavy or anything or whatnot. He's always, rejecting with puts and be careful. And what is because new all-time high prints trade with the trend, but this is, a grind higher. If you bought the dip here, that is a dip, right? This is try to just catch your piece, trade the trend, but it's hard to have an entry when you're straight up like that, right? So this is great for a retirement. This is great for anyone who entered this dip here or maybe entered right there. Great. But the more it gets up in here, you can see what happens when November came. It's almost like out of nowhere. Okay. Cool. Let's keep moving. QQQ, roughly the same thing here, right? You can see the Qs, a little bit different type of candle here on the Qs on a monthly. You can see there that it had a little bit more solid close here, and that's simply because big tech was pulling back. We have NVIDIA that's been one of the weaker stocks, semiconductors starting to get some profit taking. We still have tariffs. We still have tariffs kind of questionable. So tariffs come back on the table and then they kind of go silent. Then tariffs come back on the table and then they kind of go silent. Okay. So that is the QQQ monthly candle here, a little bit more solid red at the top from that previous month. And we technically have on a monthly candle a lower high print. And I'll talk about the Santa rally as well, because there's, I think, misconfusion about what a Santa rally actually is. It's not the entirety of December, right? The Santa rally is only the last really 5 days into the first week of the new year. It's not the entirety of December, right? So if you've been hearing Santa rally, it doesn't mean that it just rolls all the way through December in bullish. We can have some bumps. And if we get a bigger dip, then we can roll into the new year with that like 5 to maybe 7 day period of bullishness going into the new year. Okay. So top end of the range here, 635, retesting that on a monthly. So 635. And then we have this interesting kind of top wick here on QQQ, and it's sitting right there at 630. So your level this week on Qs, if we break above that, we filled the gap technically. So there was a little gap here, kind of filled that majority of the way, and then we've got a little bit left. Okay. So Qs, I think personally, are going to try to push and try to fill this gap past 630. So Qs have a little bit more room. Big tech, right? AVGO performs well. Rate cuts have a good response. We could just squeeze back under there and it fills. Okay. So Qs have a little bit more room here, a little bit more gap fill at the top. If you clear 630, you got some room for 634, 635. Okay. Qs are going to try to get to a new all-time high. They need tech to pick back up. They need Google to break out. They need NVIDIA really to step up. So if semiconductors step up, I think this is going to really happen. Your levels on support here to hold for the week, I would look right here at this 623, 624 level. 623, 624. And just look at the daily chart here and look at that setup that I talk about, or that you're familiar with, which is just break a previous day lows, hold a previous day highs, break a new previous day high, things of that nature. So this is the pivot point right here. It would be the previous day low, which would be 623. Okay, so if we hold above 623, then grind, that would be holding above the previous day low. If it breaks below 623, we come back to 620, ideally, and maybe retest that. But 620 is your big psychological level. All right, so 620 to 623 if it holds that. The only concern is if we get underneath 619, 618. If we clear underneath 620 with a big engulfing candle like this, then that's where I would get a little bit more, okay, we're going back to 610, 606 potentially. It would look something like that. Okay. Now, Brian, is that a hanging man candle? Is that like a shooting star candle right there? Yeah, it can be looked at as that, but the data could change that at any point. So we pushed up into 630, sold back off 5 points. And that candle right there shows that there's some profit taking at the top right here. Okay. This is also technically still a lower monthly high for right now. We can look at the monthly candle. We'll be right there at 629. Okay. So why is that so important? It's because that is the October monthly candle close. So if we clear back above, that would technically print a new bullish high print. And now it looks more like this. Okay. So that's why that 630 is so important, is because that is that November close right there at the top of that 629. Went up to 637, closed the month back down. So you can see that the look above and fail is real when we go all the way up to 637 and then sell right back off almost 10 points towards the end of the month. And then the next month comes and there is the push down. So if we get another look above and failed, or look above like this, we've got to clear that 637 area right there. All right. So I'll be watching that throughout the live trading sessions, watching the price action, and I can get a better read on what's going on. So these are all just trade ideas for right now. All right. So I'm prepared for either one. Kind of leaning more towards the big okey doke personally. And that's not just because I like trading puts. It's just because the market just does not typically go up in a V-shaped straight line off the lows. Bam, V-shaped straight line with really only one daily red candle. It's just not how the market goes. Here's another one. Straight up, gaps to fill, all the way back down, gives it all the way back. All right. So that scares some people sometimes because they're like, dang, like we're so bullish though. I just can't get my mind wrapped around that we're just going to flush out of nowhere, just out of nowhere. We just come back down that aggressively. That makes no sense. Well, imagine if you were at the bottom here and again, risk to reward, and you enter there and you're up and you're up and you're up and you're up and you're just trailing your stop loss, whether it be shares or a call position, and you're just trailing and trailing and trailing and trailing. If I was down here, I'm trailing my stop loss and I'm like, okay, where's my target? Somewhere around this zone. Because why would I risk everything, all my profits that I had down here, up here, and say, man, maybe I can get some more? That's greedy. If you enter down here, calls and or shares on that dip, and you got a V bottom bounce, you're just waiting for a sign that triggers you to sell. So that's why it seems so low volume and grinds, is because, okay, I'm just holding from Thanksgiving, holding from Thanksgiving, holding from Thanksgiving. Okay, I'll hold into maybe a little bit more. Maybe Powell can send us, and then I'll take profits. Okay, cool. All right. Alrighty. IWM levels on IWM. It's been strong. I mean, the small caps are benefiting. This houses, and I probably need to, I keep saying it, a video on IWM. I don't think it's talked about a lot, because when I mention it, people are like, IWM, what is that? IBM? Like, no, IWM. This is where all of your quantum stocks are housed. So every company that is still building, that is coming up, that is kind of new on the block, right? HIMS, Ionic, QBTS, RGTI are all housed in the IWM. And you saw that they've been making a comeback because they need rate cuts. So if we get a rate cut, it might already be priced in and it pulls back. My level I'll be looking for would be 240 to remain bullish on IWM, or a simple breakout above 252. Making sure that it does a clean break, retest, hold above a new high, and then looking maybe for trying to get to that psych level of 260. All right, breaking a new all-time high, maybe a psych level there. Okay. So 240 would be my level. 245 is a nice level as well, but 240 would be that really deep pullback. If I pull a fib up here from the bottom right there, that falls right into that zone. 244, 50% retracement would be 240, and that would be anywhere in this area for a pullback there, either to trade it down or wait for a pullback and then trade it back up. All right. Alrighty, starting to get to roughly the top of the hour. We've been here around 40, 45 minutes. So I'm going to go over my core list of trade setups that I like this week that I'll be looking at. And we'll get up out of here, folks. Cool. Appreciate you all for being here. Make sure you hit the like. If you haven't yet joined Leverage University and you got questions about it, just join our free newsletter down below. You can message me after after this on WAP. But yeah, you can join the free newsletter, join the WAP platform, and then message myself and my team, and then we'll get back to you there. And you can join us for live trading this week, so you don't mess up during FOMC meeting. That's right. So, all right, let's jump into the core list here. Google's been relatively strong, so I'll start off with the relatively strong stocks. Google's been relatively strong, obviously coming off this low. The level I just want to pay attention to, that pivot point, would be really 320, right? 320. I think Google still needs a pullback. It's just been resilient. It is now the leader in the AI race. Your level that you really want Google to pull back to, if you're trying to really get Google to swing back up into new highs, is if it does it here, great. Wait for a 330 break. All right, wait for a 330 break, new highs. Don't get trapped up in this mess, in my opinion. But you would want ideally a 300 or pull back to these lower 290s back here. Okay, and it looks aggressive, but that would be the best risk to reward if Google can pull back there deep and then go there. If it doesn't, it'll just grind higher, wait for a break of 330. In the middle here, if you're trying to get these gaps back down, if you haven't watched my gap fill video, go watch that. But if you are trying to get those gaps back down, ideally you want a break of those lows, break of 312, clean break underneath there, and then you can take it down to 310, and then breaks 310, it's just going to be a flush. If the market's pushing down as well, then there's your gap fill. That would be the cleanest level there. It's just break of a new low underneath 313. Your pivot area is right around this 320. You can see here that it tried to go here. That was a massive bullish candle but bulls should have continued, right? With that type of candle off of that, they should have continued that. But if you can see, the next candle came in next day, bullish. Oh man, calls on Google. Nope, right back down. Right? So it is literally a day trader's market. And for anyone Leverage University or anyone that's watched my gap fill video, you see this little small gap here. That's probably going to get filled ideally. So at least we can monitor that 320 level. Breaks 320, those lows, you can take it down to 317, and then maybe down into 316, 315. And that would be your target. It would look something like this. Okay. So got that little small gap. The larger one needs to break the lows cleanly, because you see it's holding up this 315 level pretty solid. Okay. Cool. Okay. That's relatively strong. Apple also relatively strong. Okay. So what does that mean? That means that it is stronger comparative or strength with the market. Okay. So as the market has been pushing up, Apple has been also very, very strong. Well, Brian, this is a pullback here. What do you mean? That is a retest typically. Okay. So Apple is retesting this previous breakout high, and this is what a break and a retest looks like. Break, retest. If Apple holds this 275 and the market stays strong, and Qs are strong, then that could be that reversal there off of Apple, right? Underneath, or excuse me, over, as we call it, this balance range here. Okay, balance range. Okay, there's a balance consolidation range. It got above it. You can see break, consolidation. There's that retest right there. Break. So it's coming right back into 275 area. So if Apple can hold 275, 276, then look for it back up potentially if the market holds. Okay. If Apple breaks underneath back into this balance range, then we've got some gaps below, and that's not necessarily a good thing. Okay. So Apple also relatively strong with the market. Microsoft has been also relatively strong with the market because it has been holding up this daily moving average here of the daily 200. Okay. Daily 200. So Microsoft coming off of that previous highs. Let me zoom out here. All right. Previous highs right into the daily 200 moving average, and then pushing back up. It's got some gaps back to the upside. Looks like it's trying to retrace back to 500 ultimately, back up to that 500 level, but got to get above that daily 20 as well. So that will be my first pivot area or target, which would be 490 on Microsoft, something like that. And then we would react accordingly there, because that is a previous low and it could reject that and then come right back down, right? So it's got to clear these moving averages to move up to the bigger cluster of moving averages up here. So got to clear that 490 ultimately. All right. So those are our three relatively strong. Let's move Meta up here. Everyone's been talking about Meta, obviously. Great dip buy pickup if you picked up Meta back near 600. Awesome job. Now Meta's at a very pivotal area here because as everyone's gotten bullish on Meta, right, it's done a V bottom bounce off of news from Zuck. Okay. So ideally what you would want is you'd want a little higher low daily set. That essentially means that when it V bottoms off of that bounce, you want to find where a daily higher low can be set for your entry ideally. Okay. So if the market gets strong and Meta pulls back, you want it to hold above 625. Okay. You want it to ideally hold above 625. Now you're like, Brian, what about 650? You just blasted straight through that. That's my first level, is just that gap fill. So 650, it breaks underneath 650. Maybe look for the daily 20 pullback, but 650 is our level for Meta to potentially pull back and fill that gap. That's what you want ideally for it to look like. Hold that, and then hold that higher low trend line. Okay. Break up, pull back, break up, pull back, stair step your way up. All right. Now, what if it doesn't pull back and it just breaks above this daily 50? Okay. Well, Meta's trying to get to 700. All right. Meta's trying to get to that psychological level of 700, and that will be in the middle of the gap. And if I pull a fib from there as well, from the highs back to that low, that should be right into that 50% retracement. So that is normal. So 50% retracement, see what it does there at 690, 700. If it just keeps grinding and breaking higher. All right. Cool. Let me check the chat. I think I hear something. Okay, nothing there. All right, everybody good? All right. Relatively strong. Those are 4. Tesla also relatively strong. All right. So Tesla had a nice bounce off that 400, held that 400, but is right back up into highs of 460, 470. It's pretty clear. Line in the sand here. Risk to reward, you either break above new highs above 470, or you reject and pull back just a little bit. I'll be watching the daily 20 and daily 50, that cluster right there to pull back into, okay? Which will be 440. So 440, if you're a Tesla trader, 440 will be that level that you'd be watching. 440. Okay, 440. Okay. All right. Let's look at Amazon. This is one of my top setups that I'll be watching this week, ideally, simply because I think that we need a pullback. So I'll probably be looking more at the relatively kind of weaker stocks personally. It's like, of course you are, Brian, because you like trading puts. But Amazon is a great setup, in my opinion, if the market stays a little bit, because Amazon's been relatively weak. It's been pulling back off of, the market pushing up into new highs. So as the market was green, pushing up, Amazon was pushing down. Okay. So what I'll be looking for Amazon are two levels. Ideally, filling this gap back up to 234 and looking for a potential reject there. Okay. So pushing back up into that level and then looking at that 234, 235 reject to come back down. Okay. If Amazon holds underneath 230, you can see these little engulfing bearish flag candles that look like a big engulfing push down break of 230. There's the retest, little push back up, and it's rolling over. So if Amazon continues to break new lows, if it breaks that 226, right, we've got nothing but room, in my opinion, down to 220 and maybe back to this 215. And there is your big kind of rollover bear flag. Okay, kind of as we call it, a H pattern or a rollover. Okay. If I look at daily moving averages here, you can see it's underneath the daily 20. All right. That is signaling weakness. It is also kind of perched up on this daily cluster. So you see that if it gets underneath this cluster of moving averages right there, underneath 226, where's the next moving average? Right back to the lows. Look what happened right here. All right. So you see that cluster moving average, it acts like a wave pushing down on the stock, pushes it down and goes back to the next one. All right. Cool. Let's wrap it up here. NVIDIA is also relatively weak, but we know that NVIDIA can change at any point. So you see NVIDIA here is underneath these daily cluster of moving averages, which we've been absolutely killing NVIDIA. NVIDIA has been paying the absolute bills because we know a level and we can trust it. So as long as NVIDIA is underneath this 184, 185 level, just rejecting it, pushing up into there, reject, pushing up in there, reject, pushing up in there, reject for puts, right? It's rejecting off of a ceiling of 185. Now, the difference is that NVIDIA at any point, it's building and curling here. Do you see that? So it's not really aggressively coming down. It needs a catalyst. So NVIDIA is curling at any point. It could just go like this, right? So I'm very mindful of that I'll keep using that level until that level gives out. And that would be closing like an hourly candle above 187 and then using that 185 as a support. Okay. We look at the daily cluster of moving averages here. You can see it is like right on it. And if the market anywhere gets weak, okay, NVIDIA is most likely coming back to 170. Anywhere weakness is most likely going to do that. Okay. So it's indicative. That's why relatively strong and relatively weak, because if the market pulls back, then I know where I'm going for those puts. If the market continues higher, right, then I might not want to, trade that necessarily because it can't go any lower because the market's pushing higher, right? AMD also relatively. Now AMD's candle here on a daily looks very interesting. That is perched right on that daily moving average cluster with a hanging man candle, literally like hanging on by a thin thread right up against that previous support, now turn resistance. And this AMD, you just need like Qs and SPY to kind of break underneath their resistances. So Qs underneath 623, 620. You need SPY back underneath 680. Like that's what will get this moving back down like that. Okay. So those two, Amazon, NVIDIA, AMD, if the market gets any weak, those are the three that I'll be ideally looking at. But if the market stays strong, we've got our Microsoft that could push up, Google that can continually push up. Google's kind of on the iffy side if it's going to actually flush because it's been so strong. Apple could bounce and go higher if the market gets strong. Let's touch on Hood. Okay. We know about crypto and Bitcoin. If you haven't watched my Bitcoin video about my thesis on that, coming back to, 70s, 60s, 50s, there's my overhead supply on Bitcoin. And why I'm talking about that with Hood is because Hood typically reacts with crypto. So if Bitcoin gets, weakness underneath this 93 or back underneath 90 at all, and it just can't spur higher, then we're going to probably pull back to 80. If we break 80, then that's when Hood pulls back as well. So I'll just be watching Bitcoin with Hood, but it's been strong because Bitcoin's been holding up 80 and it went from 80 back to roughly mid 90s, right? So Hood has been straight up. Where would I want Hood to pull back to ideally is really just looking at the moving averages here. Okay. So I like to trade as close as possible to the daily moving averages if it's at a solid daily moving average. The daily 20 is a really good takeoff point. Okay. So see how it took off once it got above, it broke above, retested, and then held that daily 20, which is this light blue line. Okay. So that is a level I would ideally like for it to pull back into like that. And I know there's a gap right here, so that's also concerning, but as long as it holds above 125, right, then ideally you can get that bounce and then roll back over. You see how big that 125 is right there, right there. Use it as rejection right there. So if it gets underneath 125, then we can start doing something like that, right? And then there's our another lower low, lower highs, and then we're coming back lower. Okay. However, I don't think that's going to be a case until it happens. So I'm prepared for either one. We got some gaps up here. I think personally it wants 150 again before setting a new lower high or something like that. I think Hood wants 150. It's trying to get back to that 150. All right. Some people would call this like a megaphone outlook here. It's kind of in this big megaphone structure, back, forth, and then back up, trying to get to that 150 mark. So if we can I'm bullish on Hood. So if it pulls back into that 125, I'm looking ideally if the market holds up, if Bitcoin's holding up, I'm looking for something to do something like that. All right. So just letting you know, I am bullish on some stocks, but I'm very keen on entries because these rejections are nasty. They are nasty. The moment you get in calls, next thing you know, people are taking profits. They are absolutely nasty. So staircase up, elevator down is what's happening right now. Alrighty. What questions does anyone have? What questions? I'll be covering more throughout the remainder of the week. And I will be live trading this week, all in Leverage University. If you've still not joined, take your time. No pressure at all. Just make sure you join that newsletter so you're aware, or if you have any questions or concerns, you're able to message us on our WHOP, WHOP platform. And that's that link down below. Cool. I will be available throughout the evening after I do this. If people want to just catch our team, myself, messaging, anything like that. But yeah, that's it. Make sure I covered everything. I think I did. I'm excited for this week. It's going to be very volatile. Position sizing down until we get comfortable of where the direction is. Build up a little base and size down. Keep our stop losses tight. But yeah, I'm suspecting some type of red to come in on a pullback this week at some point. We got our futures market a little bit down as well, but nothing major. We good? Cool. I think some of y'all right now, as I'm speaking, I'm looking at my phone. Y'all are joining the newsletter. So welcome. Appreciate y'all. Cool. Alrighty. Going once, going twice. Thank you. All right. Trent, that light's coming in this week. That light is coming in this week. It's like, man, this dude looking dark on here. I talked about that. If y'all got to go, that's cool. But I did talk about that when I moved setups here, I had a big key light. If you go back and look at my old videos, I had a big key light that lit me right here that was massive. But because I have a wall right here, the key light necessarily can't fit. So I've got to get one of those streamer lights and I ordered it for Black Friday. So that's coming. So just know that I take my setup serious. Like, man, this dude been saying he about to get a light for the last 3 sessions. I don't believe it. All right, family. Thank y'all so much. Peace, love, and blessings.